Hey everyone, episode 39, we had on Austin Yalley, the partner at Brick and Mortar Ventures. Some of their investors are United Rentals, Home Depot, Autodesk. They're a venture capital firm that invests in construction technology companies, software side, hardware side, autonomous vehicles, autonomous equipment, things like that. We talked about what makes a great software investment. What do they look for? A lot of it's on the team, the founder. Do they have grit? Do they understand the customer? And what makes great technology companies, right? And really the focus matters on, can you solve real problems for customers in a consistent way? So different episode than we generally have. It's the first time we've had a software investor, a venture capital investor on today, but given their focus on this space and the background with United and Home Depot as some investors, thought it'd be an interesting episode. Hope you guys enjoy. All right, Austin, welcome to the Rental Roundtable, episode number 39. Thanks for joining.
Yeah, thanks, Cal. Thanks for having me.
We've known each other 4.5 years. When we were first day zero thinking of starting Quipli, you told us that effectively you could do it, but good luck. It's going to take a lot of time and effort, and I think you've been right. 4.5 years in, it's been a knife fight for sure.
Yeah, for
very
sure.
helpful sort of thinking about those first few days. We've never had on a software investor before, so you're a venture capitalist focused on the construction world, right? So Brick and Mortar Ventures, your partner. Like, I'm at your website right now, right? It says, help the world build better. That is our challenge to entrepreneurs. That is what we invest in. So we talked to a lot of rental owners. We talked to a variety of different people. We've never had on an investor. So the people who are investing in a company like Quipli, you're obviously not an investor, but like you would look at companies like Quipli, you look at Gearflow, you're an investor in Boom and Bucket, et cetera. So you see the market from a different perspective, right? And I'm excited to dive in and kind of see what you've been seeing in the market the last few years and sort of where the future of equipment and rental moves. So excited for this episode today. And I think just starting off, Austin, love to hear just around your story, right? Because weren't always a venture capital investor. You're a professional athlete and a past life. So Austin, tell me about your journey to where we are today and how you started getting involved in the VC world, particularly in the construction VC world.
Yeah, for sure. Maybe I'll start with brick and mortar and kind of our
Yeah.
focus, and then I can tell a little bit about the lives lived before this.
Mm-hmm.
So Brick and Mortar Ventures were venture capital fund focused exclusively on what I'd call the construction technology ecosystem. Slightly separately from what would be labeled more prop tech, if you will. We look at ourselves kind of more on boots on the ground and in the field. And our founder, Darren Bechtel, is part of the Bechtel family. Everybody on our team came from the construction industry, largely besides myself. So my background is a little bit different, which I'll dive into. But our team has spent time in the field. They came from industry, and our LPs, the folks that are giving us capital to invest to date, have all been part of the construction ecosystem. Examples would be United Rentals and Home Depot and Autodesk and several others. So the concept being kind of, a for us, by us mentality. And we're writing $1 to $5 million checks into early stage companies, not just software. We'll invest in hardware, robotics, tech-enabled services. At the end of the day, we want to feel like we can move the needle for the founders and help them, because the construction industry is probably a lot larger than I think investors generally appreciate, and probably a lot more complex. So that's our mission is to improve the industry and help, and do that via investing in early stage companies. A little bit of my background, I guess, is, like I said, I don't come from the construction industry. I studied economics at Stanford and played baseball there, and left after my junior year. I got drafted by the Dodgers, and went and chased a dream for a bit, and was all over the country in the minor leagues, and was on a bus and doing 12-hour bus rides and waking up and playing games. And it was a blast. I got to see it
Yeah.
all over the country, and it was quite fun. And then I had to get a real job. So I came back to San Francisco and or Bay Area and finished my degree, and immediately does what one does and went into investment banking without even knowing what that was, and was fortunate enough to just get my foot in the door at a group called Montgomery and Company. And we focused on software M&A and tech-enabled services, and I was there for 3.5 years. It was a great group. I had so much fun, learned a lot. And then was fortunate enough to meet a guy named Ron Johnson, who started Apple Retail Stores, and he was starting a company called Enjoy, And I went over there as one of the first business hires, kind of on day one. And that's where I really fell in love with early stage companies. It was the closest thing to a baseball team that I had been a part of since playing. And that's really what an early stage company is, as you know. It's, there's so much camaraderie and it's a lot of fun. And I was there for 4 years. We grew from about 5 people to 1,000. And that realized I liked it when it was 5 people. So I started looking at early stage companies to join again. And my family does land development in Arizona. They've been doing it for 40 something years. And all of a sudden they were calling me, asking me why some of these big tech companies were putting in offers on land deals that normally would be for, the large home builders. And that kind of pulled me down that path and started digging in, and you could see the industry changing. Started doing research on companies, and brick and mortar was a common investor in a lot of the companies that seemed to actually be getting traction. So I was fortunate enough to meet Darren. At that time, he was investing his own personal capital and what we call Fund Zero. And he raised the first tranche of outside capital. And that's when I joined with Costa Pena. And that was like 6.5 years ago. So kind of crazy. I met you not long after that, actually. It was, just on the whiteboard, which is fun.
Yeah, I was like, hey, I got this idea on a whiteboard. What do you think? He's like, well, I'll give you, here's one reason why it's going to work. Here's 100 why it won't. And, the reality is, right, 91% of software companies don't make it 3 years. 96% don't get to $1 million. And you always think, yeah, but we're the exception. And it's, it's hard. But it's been cool to now come 4.5 years later. Here we are again. I feel like we could do several episodes with the different lives you've lived, right? Professional baseball player, investment banker. Yeah, grown from 5 to 1,000 people, and now VC for the last 7 years in the space that we're in. Before we get into the investing side, like, what were some of the highlights being a professional baseball player, minor leagues, drive around the country? I mean, that comes out to be awesome with your friends playing baseball and getting paid to do it, right?
Yeah, it's funny. It sounds corny, but that is like, you miss your teammates, and it's you miss the camaraderie, and at the time everyone's kind of in the doldrums of the summer.
Right.
You play 130 games in 140 days, and it can be a grind, but that's the part you miss. You tend to forget all the hard things. Kind of like a startup, when you start looking back, you realize that there were a lot of things that you all of a sudden get erased from your memory. You just remember the fun stuff. But it was the overnight bus rides, playing in the morning. You almost have to laugh at it. But we ate a lot of peanut butter jelly sandwiches. They've improved things a lot in the last couple of years. But my dad always laughed when my dad played, and I think my salary at the time was the same as his. That was 50 years ago. So they didn't exactly account for inflation.
No, but you're having fun. And I remember the last episode of the show, The Office, Andy said, I wish there was a way to know you're in the good old days while you're still living them. Right. And we wrote that in a previous startup. We wrote that on the board because you're grinding and you're like, oh man, this is right. But like, you always look back and go, man, that was the best part. Like you said, with five employees, 1,000 later, what you missed was the 5, right? Like that's the fun part. And it's hard, but like you sort of romanticize and forget the hard stuff. And, I'm sure like driving around the country and a bus got old after a while, but that's a pretty cool experience getting to do. A lot of kids, probably a lot of 8-year-old kids out there would love to live that life.
Yeah. I mean, there's a lot of like random signed balls out there from little kids at those games, I'm sure. I think Curtis from our team has bought up all my old baseball cards from eBay and driven up the price about 50 cents somehow.
There you go. So I'm interested in investing stuff you're doing now, right? So, and just to kind of reiterate what you said, some of your LPs, the people who give you money, right? United Rentals, Home Depot, Autodesk, they give you guys money to go invest into earlier stage companies. The companies like a Quipli, right? Like those are the types of companies you guys would invest in. What do you look for? Like, what makes a great investment? Like, what do you look for when you're looking at a company to invest in? And then when it plays out in a happy way in 5-10 years, why are those companies end up being successful?
Yeah, it's a great question. I mean, I think if we had a perfect answer, we would.
It'd be easy. Everyone would do it.
1,000, yeah. But you know what? I think for us, we're early stage. So a lot of times, it can be just a whiteboard idea. We don't, we tend to be a little bit past that, someone with a product, at least in the market. But, first and foremost, it needs to be solving a problem in our industry. Like, that's part one. If we don't feel like we can help the founder in any way, there's other investors out there, and we would tell them that. So we'll start there. And then, a lot of the diligence is on the founders and the team early on. As you probably know, a lot of these companies early will pivot, and they'll start with one solution and realize that, hey, maybe this wasn't the burning problem that we thought, but there's something else over here that's interesting. And we'll try to be that sounding board to help, guide them on that directional change and validate some of those assumptions. And that's kind of the role we play early. Have not just our LPs, but a network well beyond that. And it's important we tell our LPs that, hey, our companies, our investments, they need to sell to your competitors to grow to the stage we all want them to. There's no, exclusivity there. Curtis from our team has a good saying, like, we'll try to get, interactions with the enemy, right? We'll get those. We want the product out there. We want them interacting, and we'll help make those intros. We'll help get them on a job site so you can get real interactions. And that's what we're looking for is, how is that company taking in that feedback? And how are they adjusting the product and solving the problems as they go? Because we know it's not going to be where they start. So, in order for them to be successful, they need to be able to receive that feedback and pull out the parts that are important, and then, directionally change and adjust the company as they go. So those are the types of things we're looking for. And, I think we'll see over time, but I do think that early team is really a big part of the bet. Right. If we start with a big enough problem and we get the right team, going after it, it feels like we've stacked the deck, and that's what we're trying to do. So those are the types of things we're looking for is, are the founders, can they get, knocked down a bunch of times and get back up? Are they listening to the customers? Because as you said, it's a grind, and you got to be willing to not give up.
Yeah, for sure. That's sort of what I thought when we were starting Quipli in 2020. I was like, all right, if I could not run out of money and not give up for 10 years, looking at the equipment rental industry, like, I think I could build a good company? I was like, yeah, for sure. Okay, the question is, how do you make it 10 years? You touched on the grit part. I think, the average person, if you watch Shark Tank, it's like, oh, I have this great widget, right? And that's it. It's the idea. And it's like, well, the reality is, like, most of the time, the idea you had was wrong. But do you have the perseverance to kind of navigate through that and stick with it long enough? It's interesting what you said, which I agree with. Like, you're really investing in early stage in the team, right? And the leader. Like, what are the particular qualities that how do you find those right people, right? Because what you're looking for is customer obsession. You're looking for grit. How do you get a sense of that when you're talking to founders?
Yeah, I mean, I think we tend to spend a lot of time with the founders before we invest. If a founder's coming and raising and running a process to raise capital, and we don't feel like we're getting a really good understanding of the team, it'll be harder for us to pull the trigger. And, so part of it is just getting interactions with the founder and asking questions and really understanding their background and how did they get here? How did the team get here? What led to that? Have they failed before? Have they started a company before? It's not always the case. Did they come from industry? Did they come from is this a problem they know intimately, or are they a new, fresh approach and mindset from outside industry? I think both are interesting. We see both within the portfolio. There's pluses and minuses to both those. So there's no perfect formula. I think again, it's, things that I'm interested in again are, have you been able to, have you failed before and really, keep going, and can you recruit? Who are you surrounding yourself with? Is it the best that you can possibly surround yourself with? And do you know your holes? And are you plugging those with the teammates around you? It's not all that dissimilar to trying to create a baseball team in a lot of ways, right? It's never going to be perfect. So you want to understand those and understand where are their blind spots. And those are some of the qualities we're looking for along the way.
Yeah, for sure. It's not always about, you want to get the best players, but you want the best mosaic. How do they all fit together, right? Because, the baseball player, the best players all stacked together. You got a bunch of Steph Currys on the team. That may not be good because they all want to shoot, right? You got to have some rebounders and things
Yeah.
like that. On the founder failing, like, is that viewed positively in a sense? Because there's an investor in Atlanta that like only invest in founders who have started a company and failed and are back again, and that shows grit because like they want to come back to the table. Like, a lot of people would say, "Oh, you failed. Why would we come in for the second one?" Right? But
Right.
it could be viewed as a positive. What about the failed experience starting a company is attractive? Like, what do you look for in that experience?
Yeah, I mean, I think there's the concept of a repeat founder. I think you typically is a premium, and I think there's a lot behind that, whether they failed or not. I think there's just a lot of things in starting a company that if you've done it before, you're not wasting any motion doing it again.
Right. Mm-hmm.
So I do think there's just like blocking and tackling that I think is valuable along the way, and then it's a little, as there's just going to be ups and downs in the journey. And if you've done it before, that, and you probably, your mindset, you got to be kind of, pretty optimistic,
Yeah.
overly optimistic. And, you almost got to be right on the borderline of crazy, and it's like, and I think there's something to that. There's a magic to it. And people want to be around that. And that's, I think that's the quality we're looking for. I think what you also don't want to miss is the first time founder that's never done it before, right? There's no reason that they won't be able to do it. And we don't want to filter them out either. Can we help them? Do they have the right mindset that we feel like, maybe there's other ways they've failed and gotten back up again? That has nothing to do with creating a company, right? We all have life experiences in a variety of ways that shape who we are. So those are the stories and the antidotes we try to tease out. It's not too dissimilar to interviewing a candidate in a lot of ways that you're trying to hire.
Yeah, and I've also heard from investors, like they like to invest in the relationship's more of a line than a dot. Like you get to know someone over a period of years, and biggest thing you said, like you want to feel comfortable that you understand them. And if you don't really understand the founder, you're probably not going to choose to invest because you really want to know who you're signing up for with, over a 10-year period.
I tell founders the same thing. I think we typically take a board seat. Not always, but typically. And, it's like you're signing up for a marriage. This is, our funds are 8 years long. And, you should probably know who we are. I think it's really an important part. You should know your board members, who's going to be there, during that journey, and finding the right mix of people you want around the table is important, not just for us, but for the founder. And that's, our approach to investing is, we co-invest on most of our deals, and we think that's important. At the end of the day, we want to surround our founders with the best possible people that can help. And we're not the team that knows B2B enterprise sales, right? Like that's not our value. There's much better folks that do that and have a lot of reps. Like if that's what we need, let's try to bring someone like that in alongside us, right? Like I think it's not just, the founding team. It's also, we want to surround, the advisory board along the way too.
Yeah, it's not just the money; it's the expertise, the support. And I agree with for both sides. The founder, this is the marriage. Tony Bennett, the old UVA basketball coach who retired. I'm a big UVA basketball fan. He retired last year, but when he was recruiting and hiring people, he said, "I want to find people I can win with, of course, but I want to really find people I can lose with, like because the losing will happen, and can you still have fun? Can you stick it through?" When things are easy and winning, you can work with anyone, right? But when it gets tough, can you still stick it out, right? I want to talk about some of the trends you're seeing in the industry, right? Like, it's 2025, and you're probably, guessing you're talking to probably 100 plus companies this year, right? You're probably looking at a lot of companies. What are some of the trends you guys are looking at? You're kind of making investments, kind of looking out in the next 5 or 10 years.
Yeah, it's a good question. I think, the fundraising environment has been, probably relatively challenging over the last, call it year or so for early stage company. Well, not just early stage, just venture. backed companies. And I think we're starting to, that's starting to loosen up a little bit, which is exciting. From the construction tech space, I would say this is some of the most talented crop of deal flow I've seen since I've been here. It's just such a mix of folks, not just from industry, but also people coming in from outside industry. And I think, part of that is like filtering, that humbleness of willing to talk to customers and understand, because, I think construction gets a bit of a bad rap as far as industry. And I don't think there's a full appreciation of the work that's being performed in the field and how complex and challenging it is. So, it's exciting because we're getting a bunch of talent, and we're, as if you have a first best in class product team, the speed at which you can move and iterate on product is vastly different. And I think we're seeing that, these product teams come in and, really starting to dig into the problems, which is exciting. And, I think the industry will be, hopefully surprised in a good way with some of these products that start to roll out and how fast they change and improve. And that that's exciting. And it's not just software. I think the other part we see a ton of is robotics in our space. And, we keep internally talking about like, this feels like the year of construction robotics. And, for us, these are really tools for the industry, right? We're not trying to replace labor. And I think that is historically been some confusion, apprehension. And now I think some of these tools are out there and they're working and they're really improving, safety and improving, work quality and improving, how fast work's getting done. So I think that's, when it's viewed that way and it's really solving a real problem in the field and it's starting to be trusted, I think that's creates this environment that's really exciting.
Yeah, I'm interested on the robotics side in particular, but as we think about a rental company in 2025 versus 2035, like what are some of the things that rental owners should be thinking about? Like, should they be preparing for a future with, robotics in their fleet? Or like, hey, what are some of the trends that are going to revolutionize rental in the next decade?
Yeah, it's a good question. Like, I think that's right. I think there's a world where robotics, I think we have some time there, right? But I think there's a world where that is just another piece of equipment, right? I think that's right. And then I think, some other trends we see is obviously like electrification of the fleets. And, I think when I first started, I don't think there was a ton of customer pull from what we had heard. And your audience probably, I would assume probably heard that too. There was a lot of talk about electrification, but when there wasn't a lot of demand, at least from what we observed from the actual customers. I think that is changing a bit. Some of these jobs, there's starting to be requirements for electrification and kind of the carbon footprint that's happening on the job site. And, some of it's starting in Europe. And I think you'll start to see that mix start to take hold, I think. So that's a trend we see. I think where that goes, we'll see. But I think that's for sure top of mind. And there's a lot of benefits, not just from the carbon footprint, but just a quieter, safer job site that we think will start to see that trend. Autonomy is another area. I think that gets talked about a lot. We have an investment in a company called Safe AI. It's retrofitting heavy equipment, starting, largely with the mining space. And, I think that's another world that is, you're already seeing it. It's been in mining for quite some time. And I think certain jobs that are repeatable, linear, I think you're going to see some of that autonomy start to come. Solar would be, solar projects are a good example. Wind turbine, things that take up a lot of space, repeat over and over. I think that's where we're already seeing some of that autonomy show up in the field, and rental equipment is going to play a role there. There's no doubt.
Yeah. And what about AI? Are you seeing more? I mean, you're seeing like, the Quipli is 5 years from now, and like whatever the leaders are like you're seeing all these things happen. Are you seeing a lot more AI companies right now in the construction world, or not yet?
Yeah, I think it depends on how you define that. I think there's a lot of talk about it. it doesn't, the way I would tell, if it doesn't change the fact that you need to solve a real problem, right? So, just slapping AI on top of something, doesn't make it better necessarily. And I think our industry is going to be skeptical, right? That's just because you're selling AI. It doesn't mean anything to them. And I think that comes back to like, are we solving the right problem? Is this a problem that for the industry? And I think the flip side of that is there's a ton of data that gets generated within our industry for various reasons. A lot of it is unstructured. I think that's where there is a lot of opportunity for some of these LLMs and that are coming out to, help organize and use that data in a way that helps the teams in the field. And I think that's where the opportunity for sure is. I think how that data gets shared, the security behind that, who owns the data, there's a lot that needs to be solved. But I do think, there's probably a unique opportunity within the construction industry to be able to take advantage of this wave in a real way. And then I think the maybe less obvious area is all this work all this AI and LLMs that are coming out are generating just a massive need for data centers. That's work.
Right. That's interesting. Like the most transformational part of AI for rail company may not be in their business. It's for all the building that's going to be needed.
It's already,
right? It's
already happening. And, all those need power, right? So there's just a bunch of second order and third order effects that, to your point, will be more immediate, frankly, and are already happening within the industry. So, those are the things that are for sure already happening. And, I think what happens after that, where it plays a role, I think that's just going to take time. And it'll come down to whether you're solving a real problem or it's a nice to have.
Yeah, that's it. And I feel like a year or two ago when AI's been around for like 40, 50 years, really, like machine learning. But like it became like really hot 2 years ago, like just having a .ai domain name got you funded. And now people are like, okay, but like, what are you actually doing that makes my customer's life better, right? And if you can improve quality of life, if you can improve profitability, and you could show that like home run, I think that's sort of what I've seen change is like even companies branding, like companies who say, we have a new AI feature, check it out. Like that sort of falls flat. It's like, hey, we have a new feature that will make you 20% more money. And then the footnote is powered by AI. You don't even need to say it's powered by AI, right? Like, it's really around how do you improve your business. I think on the data side in particular, there's something there because I was at the Future of Rental event last week, part of the American Rental Association, and they had different speakers all day. And every time someone went up and talked about AI, everyone's phone came up and was taking pictures. And it was like, what I took away from it is like, there's an interest here. I don't think we've really figured out how to harness it to really improve rental owners' lives or rental operators or builders' lives just yet. But it sort of feels like to me, like, when e-commerce came out and cloud and mobile and you're like, all right, there's something there. It may take years to translate that into the rental owners' businesses. That's sort of how I view it. I think it's coming and it's going to be these these particular use cases that solve real pain points. But I haven't seen it yet say like everyone needs to have an AI bot today and it's going to change your life, right? It's just going to take some time.
Yeah. And I think to your point, like if I'm a business owner in the space, what do I do here? I think everyone, it's hard. You can't hide the fact that things are happening and things are changing. And I think that, what can you do now? Like, I think, a lot of these solutions probably will fall flat today. They're iterating really quickly. I think the interesting part is in order to take advantage of that, whenever it does get to a point it is solving a real problem, you're going to be in a much better position if your data is there. If you have the data, you've moved off pen and paper, if you've moved off Excel, you moved into cloud, right? Like, and you're starting to structure that data, those companies will be able to take advantage of whatever the latest, flavor of software is or AI. But if you don't, there's not a lot that you're going to be able to, it's not going to be as advantageous. So, I think step one for, a lot of these companies that we're serving is, hey, let's start getting things in the cloud. Let's emphasize that muscle of, not doing something on Excel, right? And there's better solutions out there that make lives a heck of a lot easier. Parts procurement is a pain and it's hard. And, the manuals are all either paper or PDF, right? And like matching all that together, there are solutions out there that can make life a lot easier, and, help generate more money and waste less time and do it safer. And I think those, we start with those, and you're going to start having the building blocks to take advantage of all the stuff that comes later. So that would be, AI is great, and it's definitely evolving, and it's coming for sure. There's a ton of money going in that. But step one is just, getting the business ready for that would be my point.
It's a great point. You can't skip steps, right? You got to have to start and kind of ease your way. And then, part of the thing I thought was interesting, I was taking their pictures, and there's about 500 people in the audience, and they're the people who are really leading into innovation.
Yeah.
But there are some people I know in that group who still don't have a rental software. And I'm like, I saw them taking pictures. I'm like, you can't really do AI until you get on a software. Then you got to get on the cloud, and then you got to get, you know what I mean? I thought it was interesting. You can't skip steps, right? You got to kind of go through the journey of, and AI is the newest technology leap, right? We'll go into cloud, mobile. AI is the next one. I'm interested in some of the companies like you've invested in. Like, what are some companies that you're proud of that you got in early, that have grown well, that have helped your customers? Tell me about some of the investments you've made that you're proud of.
Oh, we're proud of them all, Kyle.
All of them.
There's no favorite child, of course. No, I think the companies that are starting to get, for us, it's like, are they influencing the industry, right? Are they at a scale they're really changing how some of these companies are operating? And I think within the rental equipment space, we have Curry that started delivering materials, but they're also delivering heavy equipment and, subsidizing your fleet of, delivery, right? Like, you can own fewer trucks. You can utilize those trucks better, because at the end of the day, you need to get the equipment at the right place at the right time. And, that can be a challenge. And it is a big part of the equation for, rental houses. So, the fact that they're still growing in materials, and now, solving what is kind of a similar problem in heavy equipment as well. It's exciting. It means they've really, they're growing up and they're influencing the job site from multiple angles. So really excited for them. They've been going at it for quite some time, and they've done a phenomenal job. And then we, Curry, or I mentioned Curry, Gearflow, on the heavy equipment, parts procurement world, speaking of kind of how they've iterated on their business model, they started with, what are really hard to find parts in heavy equipment, and now are, helping manage procurement across the board for all your heavy equipment. Whether you're a rental house or a contractor owning your own, you still got to maintain that equipment. And that world is super fragmented, just like the heavy equipment world. But the common problem of trying to keep that equipment running, that's common whether you're United Rentals or whether you're a Genie deal. The dynamics between the OEM and the dealers and the independents, that ecosystem is super fragmented and hard to manage. And it can be done, in a much clearer, easier way to, at the end of the day, keep the equipment running. And, that's generating more revenue. So those guys have, started with a marketplace and now are really a software solution to manage all your procurement. And that's a good example of, starting with one big problem and iterating their way to, what's probably a bigger pain point for these companies. So proud of those guys for sticking with it. They've been around, kind of hunting around the problem and, staying out there, and they're just a great group. Then we have early, I didn't mention our accelerator, but we have like super early companies that we just help get on the job sites. And we have a company called Veristart out of Canada that allows you to, take the key out of your heavy equipment, because a lot of the keys are a common key, and it's security to be able to start the heavy equipment and do it digitally. Sounds super straightforward, but it's a real problem. And those guys have done really well. They're starting to get a product out in market. So they're just starting their journey. But as far as heavy equipment goes, those are the one, a few that are in that industry well, I think.
Well, I appreciate you say you're proud of all of them. And you're in a cool spot, right? You get to see all of them. I just get to see one really deep. You get to see across all the innovation happening, which is pretty cool. And our previous episode before you, we had on, he's actually a Quipli customer, but he's the founder of the Wounded Warrior Project. So we were talking about his journey starting that. And, I asked him, he started with $50 for a domain name and 50 backpacks. And I was like, did you ever think it was going to grow to over $1 billion of donations? Like, no, of course not, right? But you just start the problem and you just keep chipping away. At some point, the market pulls you, and then it's just sort of hold on at all costs. So, and it takes time. I know the Gearflow guys, I know the Boom and Bucket guys. I've seen the journey and the weaves, and it just takes patience and grit. That's what you're talking about. And I know we're just almost out of time here. I guess two final things. One, we've done, this is episode 39. I feel like 6 or 7 of our guests have been acquired by either United or Sunbelt. So can you tell United to stop buying everyone? Number one, just joking. But it's a question for me. I usually ask people at the end of the episode, like, what's one piece of advice you'd give a rental owner, et cetera. But I'll ask a selfish question. Like, for me, I'm a founder. You talk to founders and CEOs. Like, what advice would you give me 4+ years into building Quipli as we think about this next phase of growth and really solving our customers' problems? What advice would you give me?
I'll give you the same advice I try to tell founders that are early. It's, our industry, and I think your audience will probably, appreciate this. They are running like their hair's on fire, and these are real businesses with really hard problems. And I think you got to be respectful and cognizant that the core part of their business is not software. And, they're building stuff. And so if you can build the best possible product and stay focused on the real problems for your users and your customers, they're going to love you. These are, and if you can just stay laser focused and not get distracted by all the other kind of noise out there, I'm confident that the market is big enough and you'll make a real difference, not just in the industry, but the world, because they're building physical things. And, that is probably nothing more rewarding than that. So my advice is to stay laser focused. If for venture-backed companies, it's easy to try to change everything and, try to be everything to everyone. And I think you can actually change the world by staying laser focused in our industry. So that would be my advice is, stay humble and listening to your customers and understanding their pain points and help solve those problems. And I think, you'll wake up, already it's been 5 years, 4 years, and here you are with a real product in market. And I think your customers seem to really love it. And I think if you stay on that course, like, who knows where it goes. Right. And that's exciting. Like that, there's nothing more fun than that.
Yeah, and speaking to the Wounded Warrior guy, John, we've already exceeded what I thought what this could be. And what does it look like 5 years, 10, 15, 20 years, just compounding innovation. It's exciting. And I totally agree with the focus on the customer. I think the humbling thing to me when I visit groups, I was in Minnesota last month visiting rental companies, and these are family businesses, second, third generation. The entire town almost runs on these businesses in a sense, right? And some of the people at the counter, I'm 33 years old. There's like, I've been at this rental company for 40 years and I've seen 5 rental systems, and you have a real responsibility as a system of record. Like, although they don't really, they don't think all day about software, it's the underpinning of their business, right? So there's like a real responsibility to do the right thing for your customers. So I feel that, and when you start off and you have one customer, you don't really think about it, but when you have more, and there's like a real weight to what you're building. So I totally get that. Well, Austin, it's been awesome having you on. It's been great getting to know you over the last 4.5 years, and a lot of what you sort of gave me some advice on early on has come true. It is a knife fight, but there's an opportunity for building a great product in the rental industry. So it's great getting to know you, and I'm sure we'll continue to be friends and catch up. Thanks again for coming on, Austin.
Absolutely. Congrats on all the success so far, and excited to see where it goes.
Awesome. Thanks.